Stablecoins are non-volatile digital assets or cryptocurrencies that are pegged to an external real-world asset. Because they are designed to have a consistent value, in theory they allow for a risk-free investment. By solving one of cryptocurrency's biggest issues, which is volatility, stablecoins give retail investors more confidence to invest in cryptocurrencies. But are they a good long-term investment? Hi, this is Spencer, founder of Synapse Trading, and I've been trading and traveling across the world to teach and inspire others how to do the same. In this video, I'm going to talk about what stablecoins are, why they are popular, the top 4 stablecoins to invest in, and the risks associated with this digital currency. Firstly, what are stablecoins and how do they solve the problem of volatility? As previously mentioned, stablecoin is a non-volatile cryptocurrency that can reduce the risk of loss for crypto traders to a certain extent. But considering that stablecoin is a cryptocurrency, how can it be non-volatile? Well, here's your answer. Stablecoins are pegged to fiat currencies or any real-world asset. In other words, they are tied to a government-issued currency that we use every day, such as the US dollar. If a stablecoin is backed by US dollars in a 1-to-1 ratio, it means that one single currency stablecoin equals $1 in cash or cash equivalents and very short-term government securities. And because it is backed by a fiat currency, the value of this digital currency remains constant, hence the word stablecoin. With stablecoins, crypto users do not need to be concerned about the value of their investment plummeting at any time. Real-world assets serve as collateral for stablecoins. For every stablecoin in circulation, an asset is saved in reserve. The reserve is overseen by an independent custodian who is audited on a regular basis to prevent any fraud. This is what makes stablecoins the most reliable and secure cryptocurrency out there. For now, we cannot directly use stablecoins for our daily transactions because they are not yet an acceptable mode of payment and are not exactly widely popular. To ensure safety and prevent financial losses, crypto traders can only buy stablecoins with other cryptocurrencies at this time. So, what are some of the different types of stablecoins? It is worth noting that not all stablecoins are pegged to fiat currencies. There are some that are backed by other real-world assets. For example, metal-backed stablecoins. Some stablecoins are backed by precious metals such as gold and silver. The value of the stablecoin is determined by the value of the metal. So one stablecoin token could be equal to 1 gram of gold. Just like fiat-backed stablecoins, there are reserves of precious metal-backed stablecoins as well. The most common precious metal-backed stablecoins are Digix Global, DGX, Tether Gold, XAUT, and PAX Gold, PAXG. Next, we have cryptocurrency-backed stablecoins. In this case, the problem of volatility is addressed by the over-collateralization of reserves. The stablecoin to cryptocurrency ratio is 1:3. In other words, the amount of cryptocurrency reserve is 3 times the amount of stablecoins. So for every $1 of stablecoins, there are $3 worth of crypto in the reserves. Lastly, we have algorithmic stablecoins that are not backed by any collateral. Instead, their price is determined by an algorithm that controls the supply of stablecoins. This is how it works. When an increasing number of people are buying a lot of stablecoins, the value of the coins shoot up. When this happens, the algorithm limits the supply of coins, causing the value to revert to its original level. The same thing happens when the demand for stablecoin go down and its prices fall. So what attracts crypto traders to stablecoins? Stablecoins have a number of advantages, in addition to having a fixed value and offering stability. To begin with, because stablecoins are a component of decentralized finance or DeFi, no intermediary financial institution is involved in the stablecoin transactions. The traders can communicate directly without interference from a third party. This also means that you will not be charged a third-party fee for the services you are using. However, you must still pay a small fee to use the blockchain network. These blockchain networks are public ledgers that record all stablecoin transactions for public audit and inspection. This provides greater transparency, which is valued by all traders. Most importantly, the transactions are straightforward, fast, and are not limited by geographical boundaries. Next, what are the best stablecoins to invest in? Currently, there are around 200 stablecoins available around the world, some of which have already been released or are in development. Of those that have been released, some show more promise than others. So here are the 4 best stablecoins to invest in currently. Number 1, Tether or USDT. Tether is a fiat collateralized blockchain stable coin that is widely regarded as the most secure stablecoin to invest in. It is pegged to the US dollar at a 1-to-1 ratio, meaning 1 USDT equals to $1. Tether was originally known as Realcoin when it was introduced in 2014. It was later renamed Tether. Today, Tether has become a major source of liquidity for the crypto market. Traders can buy Tether tokens on well-known cryptocurrency exchanges like Binance, OKX, Huobi, FTX, and Bitwell. Number 2, the USD coin or USDC. The USD coin, like Tether, is pegged to the US dollar at a 1-to-1 ratio. All the USDCs in circulation today are ERC20 tokens, which can be found on the popular cryptocurrency and blockchain system, Ethereum. Coinbase and Circle collaborated to create USDC. While Coinbase is a well-known crypto exchange platform, Circle is a Boston-based peer-to-peer payments technology company. USDC is a safe investment option because it is regulated by the United States Financial Crimes Enforcement Network, also known as FinCEN. Because FinCEN fiercely opposes money laundering, there is little to no risk of fraudulent activity when trading USDC. Furthermore, the USDC reserves are audited monthly by Grant Thornton, one of the world's largest accounting networks. The audit reports are also available on the Circle website for public viewing. Number 3, Binance USD or BUSD. Binance USD is also a fiat-backed stablecoin that is pegged to the US dollar at a 1-to-1 ratio. It was founded by Paxos and Binance. Paxos is a New York-based financial institution and technology company specializing in blockchain, whereas Binance is a Cayman Islands domiciled cryptocurrency exchange. The BUSD stablecoin is approved and regulated by the New York State Department of Financial Services. It is known for making transactions accessible, flexible, and quick. Lastly, number 4, we have DAI or DAI. DAI is another popular stablecoin that is an ERC20 token. It is known for being completely decentralized as it is not backed by any external assets controlled by certain central authorities. Unlike all other stablecoins, DAI is backed by a number of cryptocurrencies rather than just one. By locking multiple cryptocurrencies in smart contracts, it maintains a 1-to-1 ratio with the US dollar. DAI is a stable trading option for users in nations with high economic instability. For such traders, this stablecoin provides a means of financial inclusion. So what are some of the disadvantages of stablecoins? Although stablecoins were created to solve the problem of volatility, it also has some inherent issues. Number 1, the absence of decentralization. The absence of decentralization is the most serious issue with stablecoins. Stablecoins, unlike all decentralized cryptocurrencies, are owned by a single entity. In other words, centralized. For example, the most popular stablecoin, Tether, is issued by Tether Limited. The company has complete control over the supply and distribution of USDT. If the company fails in the future, the value of the USDT will suffer greatly as a result. It won't be a huge financial loss for investors. Number 2, the lack of transparency. Another primary disadvantage of stablecoins is their lack of transparency. People buy stablecoins with the expectation that the owners have a reserve with a real-world asset for each stablecoin. However, there is no guarantee that the fiat currency is locked in an actual safe. Tether Limited is a good case in point. In 2018, the company was fined for failing to show reserves against which the USDT was pegged. As a result, the value of the USDT plummeted a bit briefly. Number 3, the underlying assets might be volatile. Ultimately, stablecoins are pegged to fiat currency or some underlying asset. This means they are subjected to the same volatility of the underlying assets and can be directly influenced by economic downturns, inflation, and black swan events. Though they are pegged to high-value currencies such as the US dollar, and a sudden crash is highly unlikely, it is not entirely impossible. Therefore, we can conclude that stablecoins are only as stable as the external assets that they are backed by. So, with all that said, are stablecoins a good investment? Unfortunately, there is no such thing as a risk-free investment in the crypto world. Before you invest your money in an entirely new digital financial system, you must take a leap of faith. Although the advent of stablecoins have been heralded as an innovation in the crypto market, I will not go as far to say that they are completely risk-free. Personally, when I invest in cryptocurrencies, I do so because I'm looking for capital appreciation. So I feel that investing in a coin pegged to another asset is not very useful because I might as well invest in the asset directly without the additional hassle and risk of the stablecoin. If you are moving a lot of funds through crypto exchanges, then using stablecoins will be a good way to minimize transaction costs while reducing volatility of your crypto assets during the transition. Also, for people living in countries with unstable currencies, such as currencies that are depreciating, then stablecoins might be a good way to store their cash to preserve its value. Now that I've shared all about stablecoins and its pros and cons, what do you think of it? Do you think they are a good investment? Let me know in the comments below. And if you've enjoyed this video, do remember to like and subscribe and hit the bell notification icon to receive the latest updates. That's it for this video, and I'll see you in the next one.